Hello friends, welcome back. In this session we are going to learn about assets. In the previous videos we learnt about the balance sheet, what balance is and what does it have. In this session we are going to learn in detail about assets. What are assets? Assets are items which are usually owned by a company. These are the items which help generate income or economic value for the company. For example, let us take plant and machinery. We need plant and machinery to produce goods, and these goods are then sold in the market to generate revenue. Similarly, inventories are the items we need to produce or finish goods required for selling in the market. Likewise, we have cash, which is an asset used to buy certain assets or to repay the liabilities. Basically, any items which are added or owned by the company and which help to create value for the company are called assets. Assets can be tangible or intangible. Tangibles are those assets which can be touched and felt, such as fixed asset inventories. We can touch and see these assets. In contrast, intangibles are those assets which cannot be touched, seen or felt, but they still have a value in the market. For example, goodwill, patents, leases and rights. For instance, brands such as Apple, Amazon or Boeing Airlines are assets, but we still cannot feel or see them. Assets can be tangible or intangible. Let us quickly understand these, and then we will go into detail. First, let us take cash, which is basically anything in a bank account. It can be in the form of hard cash or liquid assets, which can be easily converted into cash, such as 7-day deposits, certain asset management or liquid funds. These are called cash and cash equivalencies. Then we have expenses that can be prepaid or paid in advance. For example, we have paid the rent in advance, hence rent is a prepaid expense. Plant and machinery. We bought some plant and machinery to print pictures or a few labels for the company. These are called fixed assets. The land and building on which we have either our office or factory are the assets. Office equipment used in the day-to-day operations or admin tasks in the office is also an asset. For example, we need laptops, servers, printing machines, telephones and fax machines for performing the office-related activities. Account receivables. When we sell goods in credit, we get money after some time. These are the account receivables. Let us say we are dealing in cool drinks, such as Coca-Cola, and give these products on credit to the distributors. We distribute the cool drinks for a period of up to 7 or 10 days. This is called account receivables. Any products that we distribute to a distributor for which we receive payments are called account receivables. Finally, the inventories. The inventories are basically the stocks or the items from the raw materials, finished goods or work in progress items, which should be used to create a finished product or finished product. All these are considered as the inventories. Then there are the vehicles. Vehicles are required to distribute the goods or to transfer the raw materials, finished goods or certain kinds of other materials useful in the production process. In addition, vehicles can be used in certain types of distribution of the finished product. For instance, Coca-Cola Company employs many vans to distribute the bottles to various distributors. This is a brief description of the various assets which we have. However, there are other categories of assets known as current and non-current assets. Let us discuss these. Current assets are those assets which can be easily converted into cash. This is a key definition. Any assets which can be quickly converted into cash without much delay or decrease in the value are called current assets. For example, cash or cash equivalent. Let us say you have money in your bank account, some liquid funds or assets. The assets, investments or funds can be redeemed in the future and are called cash or cash equivalents. Next is inventory. The inventory can be raw material, work in progress material or finished goods, such as sugar and bottles for packing Coca-Cola drink. Both these items are inventories because we need these to produce the cold drink product and sell it. Next, we have got prepaid expenses. Let us say that you have paid the rent in advance. If you pay more amount of rent in advance and pay for advertisements for the next 3 years, then the benefits will be accrued for the next 3 years, and these are prepaid expenses. In other words, These are the expenses which you have prepaid or paid in advance, and hence these are the assets. Next are the account receivables. As per the example given earlier, we are selling Coca-Cola products on credit to the distributor, and the distributor makes payment after 7 days. Money that is outstanding for 7 days is called receivables, which we get from customers. Now, let us understand non-current assets. Non-current assets are the opposite of current assets, have a long-term value and cannot be easily liquidated. It takes time to liquidate the non-current assets. Let us take the example of the Coca-Cola company. Let us say that the company has a big factory in Europe, which is spread across many acres of land and is equipped with many machineries, equipment, factory shares and building. If the company plans to sell the factory, it will not be easy because the company may have to go through the bidding process and invite various investors to visit the factory. Only then can the company sell the factory. Again, these are non-current assets which are quite valuable but still take time to dispose. The first asset is land and building. It is quite simple. Let us say you have a factory building and you want to sell it. Again, you must follow the process of building, inspection and due diligence, after which it will sell. This is again one of the important items. The second assets are the vans. The company may have many delivery vans, vehicles, many buses for the transport of employees, or cars for the executives and top management people. These vehicles are assets and can be sold. The vehicles are more liquid than buildings and land. However, the vehicles are less liquid than the inventories and other assets. Next is machinery and office equipment. Let us say you are into printing business and have a couple of very big machineries for printing stickers or labels. If you want to sell these machinery, it will be very difficult. People should come and inspect the machinery to review their importance, their age, their suitability for use in their own factories. There are a number of issues. Moreover, it takes time for people to understand and then buy these items because these are not liquid items. Finally, the intangibles. The intangibles are the assets which cannot be seen, but have a value. For example, goodwill or a brand or patents. Let us say that you have invented something for which you have a patent. Although the patent is not currently generating revenue, it has a value because you can sell it in the future. Thus, the intangible assets cannot be seen or felt. Here, we have considered goodwill as an intangible asset for the sake of explanation. Goodwill is a kind of intangible asset, which also arises if we buy one company from the other. Let us say you buy a company with assets around $100 million and you pay $120 million. Technically, because we paid $120 million, the balance of $20 million is the goodwill paid as a result of the company brand. In other words, the amount paid as the book value of the assets is considered goodwill. This is one way of calculating goodwill. Goodwill can also be calculated from a company brand, which has been created in the market. In addition to positive goodwill, there is negative goodwill, which arises when the acquirer pays less than the fair value. When the acquirers pay more, it is positive goodwill, and when they pay less, it is negative goodwill. Let us assume that the asset value is $100 million, but you have paid $80 million. Technically, you paid less, and it is a negative goodwill. This is not very much applicable in the real or corporate world, and is more of a theoretical concept. The reason why I have said that this is a theoretical concept is because the amount paid is lower value than the book value. That is, the asset is worth $80 million and is not worth $100 million. Technically, you should match the asset value with the price, which should be paid. Again, it is very subjective. It is not tied to physical assets. As said earlier, you should raise the physical value of the asset and reduce the value of the asset to ensure that you match it with the price. It is considered as a long-term asset, but it needs to be tested for the impairment that is. You should regularly see whether it is correct or not. The day that you feel that it is not correct and you overvalued the asset by $20 million, you immediately write off the negative goodwill and balance your asset with the price, which you paid. This is because the actual value of the asset is not $100 million and only $80 million. This is the concept, which we have discussed. I hope you've enjoyed this session, friends. In case you have any questions, queries or doubts, feel free to connect with us or send us an email. Thank you, friends, and have a nice day.